Beware the politician with a printing press. Now, a lot of people tell me it's incorrect to say that the central banks are printing money. They say, hey, look, Jason, all this is an asset purchasing program. The central bank is just effectively buying bonds, buying other assets, which that liquidity then goes into the market. The reason I specifically like to use the word printing money or increasing the money supply, because the average Joe in the street, the average person in the street can understand, or at least get their head around why printing money or increasing the money supply is not a good idea. You know, if you have a criminal gang, an organized gang who are counterfeiting money, you know, they're counterfeiting pounds sterling and they're spending that money, most people can realize that is wrong, that is immoral, that's stealing. They're basically stealing from the wealth of everybody else in the economy who uses pounds sterlings. That's why their counterfeit money then has value, because it's essentially going into the economy and being spent as a normal, genuine pound is. Now, when the Bank of England, you know, increased liquidity, QE, bond purchases, printing money, however you want to describe it, is essentially the same process. You know, you're creating money essentially from nothing. That's why you like to use the word printing money or, you know, money expansion, because you can quickly explain to the average person in the street in about 5 minutes why printing money or increasing liquidity, increasing the money supply is bad. But it takes a lot longer to explain the full process of QE, the asset purchasing program, how it works, how the money then filters into the economy. It takes too long. The average person hasn't got that long to sort of digest. So I like to use the word printing money, even though I know that's not technically correct, although the Bank of England can print money as a final backstop. We're going to look in this show today just about printing money, inflation, long-term effects of what can happen. Not to say this is definitely going to happen in the UK. We've got some data here from Venezuela, and it's quite interesting data from the inflation numbers from Venezuela as well as the stock market. Not to say this is definitely going to happen in Europe or, you know, the Western world, but this is definitely a warning sign, a warning of a road we shouldn't go down, because this can be the disastrous consequences of it. Now, if we look here, this is the IBVC, this is the Venezuelan Stock Exchange, the Caracas Stock Exchange. Now, very interesting numbers here. On paper, very good numbers. This is one of the things about money printing, you know, excess liquidity, QE, however you want to call it. This is one of the upsides of it. You can really boost asset prices. So in today's prices, the Caracas Stock Exchange is 18,572 on its own. That number doesn't really mean anything. But if you look lower down on the table, we have the 1 year return. So in the last 365 days, this is how much the Caracas Stock Exchange has gone up. And look, it's gone up 22,064%. That is insane. I believe the Venezuelan stock market is the best performing stock market in the world. On paper, obviously in real terms, inflation adjusted, no, it's terrible. But just on paper, if you just look at the headline figures, I believe the Venezuelan stock market is the best in the world. Also had the data there, the year-to-date return. Year-to-date, so that's since January the 1st, 2019 so far. The stock market is up 1,056%. But that's only half the story. This is the data here. It's from Trading Economics. The annual inflation rate in Venezuela only fell to 282,973% in April 2019 from 329,568 in the previous month, according to the central bank. So it's quite likely those figures are bogus anyway, because they're coming from the central bank. All central banks lie about inflation. Obviously, once inflation gets this big, it's kind of out of control. The genie's out the lamp. But, they're still going to try and suppress the inflation. I've heard figures that inflation in Venezuela is well over 1,000,000%. But, even if you take the lowball figure the central bank is saying, you're still talking in the hundreds of thousands of percent a year. Now, this is the real problem that we may eventually see in Western countries if the politicians and, central banks are highly politicized. Yes, they are independent of the government in nearly all countries, but they're highly politicized. They have targets on growth, on jobs numbers. So they're following politically driven targets. So you can say they're a quasi-government agency. Yes, on paper they're supposedly independent, but they're only really independent in name only. They all have the pressure from politicians and have politically driven targets they need to make. Now, this is quite interesting. If we look at these datas here, so the top number up here, this is from the Bloomberg chart. This is the Venezuelan stock market. And you can see the numbers in the Venezuelan stock market really picked up around January this year. They really started to get going. That's when the real inflation took hold in the Venezuelan stock market. if you look at the numbers down here, this is the Venezuelan inflation rate. So top number is the stock market performance, bottom number is the inflation rate. And you can see inflation actually picked up significantly after the stock market picked up. Now, this is something that you regularly see. The way QE generally works is the central bank buys assets from a bank, and then the bank then has more money that it can spend or speculate in the economy. The banks largely don't tend to actually filter this money into the real economy. We see stock market speculation is what we see here from January. The inflation of the stock market really got going. And then we see the real economy numbers starting picking up around July to October is when inflation really gets going in the Venezuelan stock market. So when central bankers, when politicians come out, and they often will use things like the stock market to say, hey, look, we averted the crisis in 07, 08, the Dow Jones, NASDAQ, FTSE, CAC, whichever barometer, whichever index you want to prove or supposedly prove that they've saved the economy for. Stock markets are largely irrelevant, because stock markets, yes, if you have a sound money, if you don't have this sort of fictitious, infinitely expandable, paper money, if you had a real sort of gold standard kind of currency and the stock market's going up, yes, that's a true indication the economy is doing very well. If you're just essentially printing money and you're just seeing banks just speculate in the stock market, or even billionaires, millionaires, if there's a real inflation risk, you're much better being in the stock market, as those numbers from Venezuela show. You'd still be losing money in real terms, inflation adjusted. You'd still be losing a lot of money in the Venezuelan stock market, but it'd be better than holding local currency. Because if you're just holding local currency, you've got no increase in that money at all. Even if it's in a bank earning, even if it's earning a few 100% a year in the bank, it's still nowhere near, the 200,000-300% a year inflation rate. So the stock market is going to give you some a slight inflation hedge, even though they're losing hand over fist in Venezuela. This is one of the things we see in the UK, FTSE and the Dow Jones in America. We see these stock markets going up, but look how low interest rates are. Look at how much liquidity these banks have to speculate. It's not really a real barometer of how things are going. Now, I'd expect in the next 2 to 3 years, maybe shorter if a recession comes before then, but I'd say in the next 2 to 3 years, it's very likely we'll start seeing the piping up from politicians and central banks in Europe, and especially in the UK, calling for quantitative easing, calling for more asset purchases. We're already near zero interest rates anyway, so they can say, well, let's drop the interest rates to zero. We're near zero anyway. A further reduction of interest rates will do almost nothing unless they want to take them negative, which, again, low interest rates are a bad idea all around, but I think going negative is just completely immoral. But the point to take away from this is, these politicians are going to be coming out over the next few years, say, hey, look, we need to save everything. They're going to use the FTSE going up and Dow going up as examples of how they saved the economy in 07, 08. But stock markets are irrelevant. The real protection now has to be, you're likely going to have to protect yourself. So my advice would that to be, you can have some money in the FTSE if you want to. But if we see very high levels of inflation, before then we might see deflation. It's quite likely the next recession comes along, we may see a period of deflation before inflation picks back up again. But when everything's combined, when you look at all the data around the world, look at how heavily indebted all Western countries are, they cannot allow deflation, because deflation essentially means the government's going further and further into debt, because if money's increasing in value, then it essentially makes the debts bigger. If they can inflate, then it makes the debt smaller. So all Western countries are going to be pushing for high levels of inflation. And inflation's, relatively easy to do. You just keep on printing money. You just keep on QE. You just keep pumping more and more liquidity into the system. You'll get your inflation if you want it. And I believe all central banks, especially in Europe, especially in America, especially in the UK, they need to see this inflation, because it's going to erode their total debts down. Inflation is going to erode the total national debts. It's a disastrous thing to do, because it's really going to hammer the average person in the street. You're talking, most people on like fixed incomes, they don't get a monthly inflation adjusted increase. Yes, you may get 1 or 2% each year, but inflation is above 1 or 2% in every Western country, largely. You look at how much rents are going up, look at how much fuel's going up, look at how much food's going up, stuff you actually need. Yes, iPads get cheaper, phones get cheaper, but it's you can't eat an iPad. You have to buy food, you have to buy fuel to get to work, you have to put a roof over your head. So the real things people need, the inflation is really going to hit that. So in my opinion, everybody needs to start educating themselves. You want to protect yourself, you want to protect your family, start educating yourself on gold. Not to say you need to put all your money into gold, but certainly have a proportion of your savings in something safe like gold. Can you imagine a person in Venezuela who, put all their money into gold, 5-6 years ago? They would have been largely unaffected by the inflation in Venezuela because, gold's sound. You can sell it in foreign market. Yes, you have the problem the government confiscates it from you if you have a particularly large amount. But if you're in Venezuela, if you can get that gold out of the country, or you can sell it on the free markets, you've done very well, because you would have, you can then exchange your gold for US dollars, which US dollars are flawed long term, but it give you the ability to get out of Venezuela, get US dollars, and then put those US dollars into something safer. So everybody needs to be out there, start educating yourself, because most people think, the Venezuelan economy is a disaster, but in just in number terms, the stock market's up 22,000% in 1 year, but it doesn't mean anything because of inflation, and that's the real thing everybody needs to be monitoring now. You can't even really trust the Bank of England, the Fed, the ECB to give you real numbers on inflation, because they need to lie, they need to skew it down. It's in the government's interest to create inflation while also saying inflation's low. They want to tell you inflation's below 2%, but it's good for most governments of the West if their inflation is 5, 6, 7%, maybe even higher. When you actually look at real terms, look at fuel, rent, food, all the things you actually need. So start educating yourself. Consider buying yourself some gold. Consider putting your wealth into assets that are going to be safe long term. Whether that is in the FTSE, the FTSE is still a slight hedge against long-term inflation. And if we start seeing QE, you're probably going to see what happened in Venezuela. Initially, the first people in the market, the first people that get their money into the stock markets do the best, because we saw the stock market picked up around January, but the real inflation in the economy didn't pick up till July. So if you want like speculative investments, maybe just trying to look at market timing to get into the FTSE, to get into some European stock markets before the QE happens, and maybe you might be able to ride that up. That's not really an investment play that I want to do. I'm more just into preserving my own wealth long term. I'm not interested in short-term speculative plays, but if you're good at market timing, if you're good at following the charts, maybe that's something you want to look at. But long term, protect your wealth, buy some gold, and that's pretty much from this video. So Jason from Liberty Bunkers signing off, and I'll see you in a future video.